This just in, guys, a housing market recession has just arrived. Home prices are starting to fall for the very first time in a decade, and the real estate market is starting to get dragged down by rising mortgage rates. Really? I don't know about you guys, but the entire situation right now is making it a nightmare to rent or even buy a house. I mean, rents are as high as paying a mortgage with a high interest rate. Now, if you could swing it, it might actually be better to have a mortgage with a high interest rate versus rent that costs the same amount as the mortgage payment, if you know what I mean. Now, if you can qualify for a mortgage, definitely consider choosing this route. Real estate generally appreciates, this is one of these tangible assets that usually appreciates over the long term. Now, of course, sometimes, people just have to sell because of things like a loss in the family, a divorce, job relocation, etc. But what I'm saying here is that we should definitely include the current state of the real estate market as a part of our financial education. You know what I'm saying? And more importantly, our predictions on where the housing market is going to go in 2023. Now, I'm curious to know what you guys think. How is real estate looking where you're at? Is renting as bad as mortgage rates right now? Let me know your situation in the comments down below. Also, if you own a home, make sure your home is protected. Get your free home warranty quote. It takes about 15 seconds. Get your free home warranty quote. The link is in the description down below. Thousands of you guys have already done it, including myself. Get your free home warranty quote. The link is down below, you guys. Is there going to be a real estate market crash? Other channels are trying to scare their viewers, but it's mostly just fear mongering. Let me show you the real deal about where we are in the housing market, especially with those Section 8 vouchers. What's for certain here, though, is that a housing recession has already arrived. This is according to Economist right now. Yep, this has really been a year of watershed moments in real estate, and not the good kind. The housing market index, it's a metric that they use to see the outlook for home sales. It dropped all the way to 33 on a 100-point scale, its lowest level in a decade, except for the 1 month during the pandemic where everything was falling. Now, this number, anything under 50 spells trouble, so for it to hit 33, it means a lot. Not surprising though, considering how mortgage rates have just passed 7%. Did you guys hear about that? Yeah. And just to really drive it home for you guys, the difference between a 3% interest rate and a 7% interest rate usually amounts to around $1,000 more in a monthly mortgage payment on a mid-priced American home. And last I checked, we're right back down to 6.3. That should give some fresh hope for, the few remaining buyers that are in a diminishing housing market. Good news is, technically, if rates ever fall in the future, you could always, hopefully be able to refinance. Plus, after the campaign of rate hikes, Fed Reserve Chairman Jerome Powell has just signaled that the central bank will ease up. That's just one reason why mortgage rates are ticking down. The other is a little bit scarier. According to the Economist, many market participants are forecasting a recession in the United States and many places around the world. That puts downward pressure on the rates, end quote. Interesting. Now, the National Association of Home Builders already said that the housing market is already in a recession and has been since midsummer. Told you guys. And where the housing market goes, the broader economy follows. This is why these economists are expecting the nation to tip into a recession, a state of economic malaise generally defined as 2 successive quarters of decline. Their prediction? The housing market leads the United States into recession, and it's likely to pull it out, with recovery around the middle of next year. That actually gives a glimmer of hope, though. But what does all this mean for homeowners, right? For most, staying put. The vast majority of homeowners are blessed with fixed rate mortgages secured at historically low interest rates, well under 4%, many people. So there's very little incentive to sell the house. Just a small percentage of homeowners, around 1 in 10, may be in trouble. Now I'm talking about homeowners and real estate investors, entrepreneurs who hold adjustable rate mortgages that will shortly adjust to current rates if they haven't already. Those people, they're probably gonna get hit. They may even get wiped out. Now, in the years before the Great Recession of 2008, adjustable rate mortgages, they made up as much as 35% of the home lending market. When prices tumbled, many borrowers owed as much as their home was worth, if not more. Yeah, a lot of homeowners were completely underwater. Now, hopefully we won't see the same thing come in 2023. Nearly half of all current mortgages are equity rich, meaning that the borrowers owe way less than half of what their home is worth. Things could get ugly though if prices plummet, but economists, they don't expect that to happen in the current downturn. To be sure, we're going to see an uptick in foreclosures, but we're not expecting it to be anywhere near the scale of last time. More than 6 million families lost their homes due to foreclosure during the Great Recession. 6 million foreclosures. That slump followed years and years of overbuilding that yielded a housing market surplus and plummeting home values. Now, We're seeing the exact opposite. Underbuilding with a deficit of available housing, especially affordable housing. Mortgage delinquency rates, they're also at historic lows. Home prices remain higher now than they previously were a year ago, but that could very well change. Redfin predicts prices will decline by 4% in 2023 to a median value of around $368,000 per home. But there's some fine print to their prediction here. They're saying this doesn't necessarily mean that everyone's home value is starting to decline. Luxury home prices will decline in price the most. Affordable homes will likely maintain their value a bit better. Home prices may hold up better in areas of the Midwest and the Northeast where home values didn't quite rise as much during the pandemic years. Prices could fall further in pandemic boom towns such as Phoenix, Austin, Texas, and Boise, Idaho. But most probably this is going to mean a drop in home sales since prospective sellers are not necessarily going to be willing to go down in price, especially if they ain't hurting for the cash. They would rather keep their home and just wait it out. Now, for the nation's real estate agents and home sellers, last year was the best year since 2006. This year was one of the worst. Buyers are suffering too, buffeted by high interest rates, inflated asking prices, and vanishing inventory of homes for sale. First-time home buyers don't have equity to finance a large down payment. Plus, rents have been rising, so there goes saving for any kind of down payment, right? First-time home buyers now only make up 26% of all home purchasers, which is the lowest share in recent years. Now, as 2022 turns to 2023, all eyes will be trained on interest rates. Many observers say the highest interest rates are yet to come. They're predicting them peaking at around 7.5%, but Redfin forecast rates will eventually decline, sliding down to 5.8% by the end of 2023. Now, at 5.8% interest rate on, let's just say, a 30-year fixed rate mortgage, a prospective home buyer with a $2,500 monthly budget could afford a $406,000 home. Now, at 6.5% rate, that same home buyer could only afford to spend $383,000. Huge difference. Just a year ago, with a 3% interest rate, the buyer could spend $517,000. And this is the huge impact that Fed Chair Jerome Powell and the Federal Reserve are having on the average American's buying ability. So unless you're paying cash for a house, yeah, it's going to be a whole lot harder to make your first or maybe even second home buyer or real estate investment. But still, some real estate investors have their finger hovering over the buy button. They believe that there will be buying opportunities coming up. You could buy with a higher interest rate mortgage today and a lower home price, then go ahead and refinance it once the interest rate drops. You just have to analyze the right city and the neighborhood for the right valuations. But in general, as interest rates rise, housing prices, they tend to fall. This can soften the blow for higher interest rates, forcing higher loan payments on new buyers. Now, unfortunately, price reductions have yet to really materialize for home buyers as home prices have risen throughout 2022. So basically, the housing market didn't exactly behave the way Fed Chair Jerome Powell had anticipated. In the first quarter of 2022, the average home sold for about $514,000. In Q3, the average home sold for roughly $542,000. This roughly 5% increase is less than inflation, meaning housing got slightly cheaper. The problem is many people have yet to see wage increases in line with inflation, meaning affordability really hasn't improved. Renters are also still feeling the burden with rents that are up 7.8% year over year. And so this means that everyone who still needs to get their rate locked in is dealing with less affordable housing than a year ago. It all depends on the level of recession and job losses we might see going into 2023. Now, if there are large job losses, many people will need to sell their homes, period, point blank. However, interest rates will be a little bit higher and new homeowners will be less likely to be able to afford them, especially if these potential homeowners are concerned with their own economic situation. But here's hoping these job numbers keep up. If you own a home and you want to sell it or you're looking to buy a home, you might wonder whether now is the right time or not. Now, the answer is that nobody really knows. Don't let these economists lie to you. They're all educated guesses. Even the Federal Reserve has boosted interest rates in response to rising inflation. The Fed may continue on this path by pushing interest rates even higher, or they may ease off the accelerator if inflation starts to fall off a little bit faster. We're also not really sure whether or not housing prices can continue to increase at the current clip. Many major banks and real estate firms, they're all predicting falling prices over the next year. Wells Fargo, Bank of America, JP Morgan Chase. The decline in mortgage application indicates less demand, which may force price reductions. Now, if you're trying to buy, you're gambling that the Fed will stop boosting interest rates or that reduced demand from buyers will force motivated sellers to slash their home prices. Now, however, if you're on the other side of the equation, you're likely hoping that the Fed will stop increasing interest rates, making the mortgage payments on more expensive homes a little bit more affordable. Now, you also have to hope that fears of of a recession don't actually come true, leading to even fewer potential buyers for your home. Really? If you want to jump into the housing market right now, you just have to monitor the home affordability aspect of things and keep other investments liquid enough to be able to make a substantial down payment on short notice. Some are predicting that prices will start their decline in the first quarter. One prediction that I read said that there's probably going to be a modest 2% fall early in the year, followed by a steeper 5% decline in the second and third quarter before the recovery starts later in the year. Buy the dip, as they say? Perhaps. But maybe it doesn't dip. But let's hope that this makes things a little bit more easy for the working class Americans. Everybody, let's help get the word out. Share this video with your friends and your loved ones. Make sure that everybody has the right information when it comes to this economy, this housing market, and their real estate assets and investment portfolios. Go ahead and hit the share button right there, you guys. And like I said, this is a big money news update in today's hot money update, daily news report, the housing market bottoming out in 2023, predictions from the Economist, and what to do with the current situation. And as always, a big thanks for watching the video, and an even bigger thanks for dropping a like for the videos. For more of your favorites, just go ahead and head on over to the playlist section, Social Security, student loan forgiveness, and of course, how to make money before 2022 ends. And if you're interested in learning how to start your own home business, your first side hustle, or even investing in the stock market, definitely hit me up in the comments down below. I'll be sharing more and more information on this type of content, especially for new investors and new business owners. Y'all be safe, and I'll see you there.